Here we have the current stock market update for MicroStrategy Incorporated, stock ticker MSTR. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders can find this information more easily on the platform. So what we're looking at here is a 4-hour price chart. We're taking a bit of a longer view here, longer term view, because as we can see, the share price here for MSTR is rallying higher again today. So we did manage to find some support right near some of the prior support levels that we were watching in the prior video. Specifically, what we were looking at was this 38.2% Fibonacci retracement zone, which comes in right around 183.60. And we did say that this was a very critical level that has been important now for quite some time. Essentially, this is a price zone that we've been watching going all the way back to the end of May, really, because this is at least a triple top resistance zone. You could probably even call this a quadruple top resistance zone that was essentially tested on multiple occasions. And then once we did finally get a convincing break here, this is when the all-time highs started to be created. So this is a price level that we have been watching now for quite a while. This is not a new development here. And as we can see at the moment, this recent price low, I should say, came right into contact with this area. The 38.2% fib retracement comes in at 183.60, and then sort of these spike highs here come in a little bit closer to 183.80. So we were really referring to this as sort of a support zone rather than a specific support level, because as we can see here, this triple top wasn't really exact. I mean, there are some differences here in the overall share price highs that are seen here. So we do need to have a little bit of leeway here. We can't expect the market to just completely 100% obey, the technical signals, especially when you're dealing with a stock like MicroStrategy, which is incredibly volatile and really does track other assets that have almost nothing to do with the underlying business. The software business is really just an afterthought at this point. They really just hold Bitcoin. And so what that really means is that, the price of the stock is going to be greatly influenced by external assets. So the market has to really sort of translate movements in Bitcoin to now a share price in MicroStrategy. So for all of those reasons, we can't really expect, the market to obey technical signals right down to the penny. We have to have a little bit more leeway here. So we're really referring to this as a support zone rather than a specific support level. And as we can see here, this is exactly where share prices are bouncing at the moment. So overall, this is a positive development here because, we really haven't convincingly broken below any of the major exponential moving averages. We can see one candle here that is showing a spike low below that 20-period EMA. But it's still a green candle, and there was no closing period below that mark. So I would feel comfortable saying that overall, this support zone that's being created by the 20-period EMA has still remained intact, and this has been the case for quite a while here. We can see 3 separate tests here where share prices really do bounce substantially after running into this yellow line here, which is that 20-period EMA. So, the real question is, how much further can this extend? Did we really find a bottom here? Are we going to break to new highs? Will we possibly move back into 227.15 and then possibly fail there? There are a lot of questions here that need to be asked. So first, what we're going to do here just quickly, just before I end the video, is to sort of look at the indicator readings here, because there's a little bit less to be encouraged about when we look at this specific indicator reading, but I'll explain why this might not be so important. So specifically what I'm looking at here is the fact that this uptrend line in share price momentum has now clearly broken to the downside. We did definitely see a break here. And then at the same time, you're looking at a negative trend in momentum that is focused in the bearish direction. So, why isn't this important? Well, one reason would be that the slope on this uptrend line here was fairly drastic. I mean, this is the type of trend line that is broken very easily. It really didn't take much movement to the downside to break through that. If this had been more of a stable trend line, something along these lines, and then you see this break, I would consider that to be a more important event. But when you're dealing with something that looks like this, which is like probably more than a 45-degree angle here. It's a very drastic slope here. So the fact that it gets broken here, I mean, it really has to get broken at some point. So I wouldn't say that that's incredibly significant. And then the second aspect here is that this downtrend line is very short term in nature. I mean, we are looking at a 4-hour price chart here, so it's not exactly a short term price chart, but this momentum reading is not exactly long term. I mean, it is somewhat short term in nature, and it's actually being threatened at the moment. So, if share prices do continue to move higher, and they can because we're not in overbought territory right here, the relative strength index reading is right around 67.5, which is close to overbought territory, but we're not quite there yet. And you could break through this downtrend line without even becoming overbought quite yet. It would be close, but you could still break through here without even becoming overbought. So I think these are bearish signals, but I wouldn't lend a huge amount of credibility or credence to those at the moment. So specifically what we're looking at here is a near-term support zone that comes in right around 186. So I think that if we see a break below 186, we're going to start to threaten that 38.2% Fibonacci retracement zone, as well as this orange line here, which is starting to move right into that same area. That is the 50 period EMA. So if we did see this moving average sort of move into this area, and then we saw share prices break lower, that would be a warning signal. That would be the problem. Also, I mean, another potential problem that we could see here would be just sort of a failure into this prior resistance zone at 227.15. So if we did see a failure there, that would be another problem to the downside. But, for the most part, we're seeing spikes in trading volumes here that are positive. And overall, what you really do want to see here is for the weekly close, because this is the Friday trading session. So ideally, if you're long the stock, what you would want to see is for the weekly close to close above this 227.15 area. That would be the most bullish scenario. If we do see a failure here, that would be more of the most bearish scenario. So here are the sort of opposing outlooks, the two possible outlooks. Here's the current market update for MicroStrategy, stock ticker MSTR. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.